Welcome to Big Business This Week. I'm JD Durkin here at the trading floor of the New York Stock Exchange during what has been a wild week here in the financial markets, to say the least. No shortage of business news from the White House to Wall Street as tariff news and every little tariff-related update continues to roil the markets, worry investors, and perhaps even concern the U.S. consumer. Here to join me, my good friend to break it all down, Phil Rosen. He's co-founder and editor-in-chief at Opening Bell Daily. Phil, I hope you've had lots of coffee this week, man, because people like you and me certainly need it. Thanks for being here.
Thank you so much for having me, JD. It's great to be here. There is so much to talk about.
Yeah, there certainly is. Okay, so as of the time that you and I are recording this, which is late Thursday morning, we do have another pullback after yesterday's historic relief rally. We'll get to that in just a second. But as we're sitting here, we are seeing downward pressure on the S&P, down about 3%. Small caps leading the losses, down 4%. The Dow is down about 2.5%. We also have new, updated, clarified tariff policy. Phil, let's just start broad strokes. Anywhere you want to start this conversation, what's jumping out to you as we see another day of pretty substantial losses on the big board?
So really just a couple minutes before you and I started recording, CNBC reported that the White House actually clarified Trump's tariffs on China are not 125% as he said Wednesday, they're 145%. So whether we see that change again today, tomorrow, next week, I have no idea. Markets have no idea. And all that uncertainty has really been the talk of markets for the past week. And what stood out to me, I don't think markets are necessarily repricing tariffs on and off. I think they just can't stomach the uncertainty because you have Trump able to tweet something on Truth Social, and then the whole market can rip or crash pretty much on whatever sentiment the market reads in his tweet. So it's really less about, I think, the level of tariff and more just, okay, markets are expecting chaos and unpredictability, and that's really been the name of the game the last week.
Phil, I wonder if there's anything in particular you've seen when you look at the Mag 7, the Magnificent Seven names, these big splashy pro-growth, big tech stocks. Phil, you know as well as anyone, these have been the names that have been responsible for leading us to new all-time highs through this bull market the last few years. But as we're sitting here, especially given we know how much revenue exposure to China many of these companies have, Tesla's down 6.5%, Apple down 4%, Nvidia down 4%, Amazon is down 3.8%. What do you see when you look at some of those names, which, as we said, they have been not just responsible for bringing us to the new Tom highs, but we know that they are a favorite for both the institutional and retail investor alike.
So they are also a huge part of pretty much every single major index fund. And that has been reflected in, how these major indexes have done this year. They're being dragged down by the Mag 7. Tariffs have hit the Mag 7 really hard. But actually, we saw on Wednesday, right when Trump tweeted that he's pausing this 90-day tariff for most nations, the Mag 7 were some of the biggest gainers on the day. And I think you just mentioned this morning, they are pretty big losers. So I imagine that volatility will persist. But I don't even think it's not a Mag 7 problem. It's all across the market. This uncertainty is something that traders don't really know how to stomach. And I don't think that narrative is changing anytime soon, whether you're looking at growth stocks, value stocks, tech. This is all going to be the same for a bit of time, I think.
Yeah, I mean, we've got 10 of the 11 sectors of the S&P 500. To your point, Phil, are in negative territory this morning. It looks like maybe we got staples holding on to some fractional gains, but otherwise we got energy leading the losses there. We got technology shares leading the losses. It's interesting when you look at, technology names and consumer discretionary names, Phil, they've traditionally here in this bull market been the leaders, but we've really had a rotation out, from times into utilities, from times into energy, even real estate from time to time has outperformed the market. What do you make of the general rotation we've seen in the markets from investors? Given all of the uncertainty, there's clearly some other plays that they're trying to consider as opposed to the names that have been more popular the last couple of years.
Yeah, it's been very, very hard to find safe havens in the market. And, I've talked to folks and they're trying to name defensive stocks, defensive sectors, but even those are getting pretty hammered. So it's hard to find somewhere that's not so volatile right now. And, if we even look at the all-time safe havens in the bond market, those weren't moving the way anyone expected to either. And I saw the Wall Street Journal was reporting, it was either late last night or early this morning, uh, the bond market was a big reason why we got this pause on tariffs from the White House, because apparently, according to the Wall Street Journal, Trump had seen the movements in the bond market. And he even mentioned in his press conference that markets were getting a little queasy. And I imagine he was looking more at bonds rather than the stock market, even though the stock market is really what makes headlines. The bond market, it speaks quietly, but its words actually matter a lot more to, let's say, the economic plumbing of the U.S.
Yeah, what do we make of that bond market sell-off the other night, Phil? I wonder how closely you followed it. I mean, I think the traditional thinking was, all right, if investors kind of move out of equities, I think maybe the hope had been, of course, all right, we're going to go to bonds. They're backed by the full faith and security. But obviously, we had one troubling Treasury auction, at least for the 3-year earlier in the week. I agree with you. I feel like that Tuesday night kind of bond market panic helped set the scene for Wednesday's tariff announcement. What did you make of that? I mean, I don't know if you were like me. I was up really late that night because I stayed up late enough to watch markets open in Asia and kind of see the response. And we saw the writing on the wall. And I think that's been the recurring theme. Whereas if you stay up late enough here in the US, you'll start to see the writing early across Europe, across Asia that kind of sets the scene. But that bond market sell off a few nights ago, I really feel like that was the one that really spooked a lot of people and made people think, well, if they're not even rotating into bonds or fixed income, the play is just gonna sit on cash?
Yeah, and all this reinforces that idea. There's not really a corner to hide in the market right now, or at least there wasn't, until the last week or so, or up until the last week. And these bond yields were rising when, in the context of what was happening, you'd expect them to be going lower, but that suggests to some that investors are really questioning this safe haven status of the treasury market. And when you look at what Asian markets are doing overnight, and I publish a newsletter every morning before 6 a.m., so I'm always up looking at the overnight markets. This has really been an extraordinary time to be in markets, to be writing about markets, to be trading in the market. And the lesson from all the people I'm talking to, all the things I'm looking at, nothing is predictable right now. And that's being reflected in bonds and in stocks and the behavior of traders. So these are, there's nothing that I would want to do less than try to forecast something right now.
Yeah, you're not kidding. Well, dude, I don't know when you sleep, by the way, because we see your newsletter. It goes out all the time. But I always say I sleep on Saturdays, trying to get through
Yes.
the trading week at this point, and then catch up on sleep over the weekends. What was interesting to me, Phil, was so we had the bond market reacting specifically Tuesday night the way it did into Wednesday's session. It was also really interesting to hear comments from people like Jamie Dimon, who have had direct contact with the White House and leading CEOs who are saying, hey, not only is the tariff policy right now unclear, it's injecting uncertainty into the market, but it could be driving the U.S. economy towards a recession in the very short term. And I'm curious how you have watched Wall Street CEOs, some of whom have been very willing to be very public about their disdain for the tariff policy out of this White House. And even people like Elon Musk. I mean, this is a rare moment where Elon Musk was willing to, in a public posture way, separate himself from the Trump administration. Musk is in favor of free trade with Europe. He wants to lower those tariff barriers. But I feel like, when influential Wall Street CEOs speak during a market week like this, Phil, investors are going to perk their ears up and listen, aren't they?
Yeah, JD, that's exactly right. Typically we have economists, market strategists, they're publishing and commenting on the market all the time. But when you hear guys like Jamie Dimon, Bill Ackman, Ray Dalio, these guys are coming out and warning of sort of the risks of Trump's initial tariff proposal, and they were all really speaking out not in favor of these tariffs the last few days. And I believe I saw also in the Wall Street Journal, Jamie Dimon went on Fox Business and he knew Trump was going to watch or see this interview at some point, and he said a recession is likely. So when Jamie Dimon, this sort of this old guard of Wall Street, when he says a recession is likely, even a guy like Trump is going to pay attention to that. And I wonder, was there some sort of coordinated push from all these big CEOs on Wall Street? Are they trying to get the attention of Trump, Treasury Secretary Bessent, and in some way try to get a pause? And it looks like they did. I wonder to myself, was this coordinated? Was this random? I don't know. It's very hard to say, but it's a lot of high level lobbying.
Yeah, I want to ask you about the China tariff component and all this because I think it's all well and good that we got some clarity, some answers on the rest of the world, but to me the ultimate goal is trying to bring China to heel, and that is the real big tariff adversary in this. And even despite the historic gains in the market we had yesterday intraday with the S&P going up 9.5%, which is something we've seen so few times in our lifetimes, and it's the type of price action in a single day we may never see again. Despite all of that, I would argue things have only gotten worse over the last few days. And to your point, the new report from earlier this morning that says, hey, the number's actually even more aggressive than we thought it was. We're now up to 145. What will you be following in that story, knowing that, hey, no disrespect to the rest of the world, but China is the big foe where the White House's tariff goals are concerned?
Yeah, you're saying it spot on there, and all the trade war talk and sort of hubbub of, okay, 100 nations, 75 nations, all this stuff, it's all about China. This comes down to US-China relations, the US-China trade war. Are we going to enter in heightened geopolitical risks? It looks like, I imagine China will come back to the 145% retaliation. China's going to say something maybe today or tomorrow with either escalation or, hopefully maybe getting open to more negotiations. But Trump is really, in his move to pause everyone else except China, he's isolating China sort of on this island. And China could threaten to, team up with other countries or redirect global trade flows in some capacity. But these are not small numbers we're dealing with as far as these tariffs and the volume of trade that these two countries have at their disposal. So, there's a few ways that this could play out. I wonder, as a markets guy, I'm looking at how financial markets are reacting to this, and it's possible that this trade war, I think, does seep into financial markets. You can see some sort of currency war, currency devaluation, or you could see China start trying to dump all their US treasuries. That would have pretty serious economic consequences, I think, both in China and the US. And I'm sure all this is just going to be more volatility in your everyday stock trading as well. I think in a ideal scenario, you have negotiations and then China and the US come up with something that maybe they don't want, but they're at least content to say yes to, and maybe that'll lead to market stabilizing. The Fed gets a little more breathing room on rate cuts. And, I don't think there's a likelihood of that happening super soon. Probably more realistic is an ongoing standoff, and that's going to be prolonged volatility in markets, currencies, probably treasuries as well. And, that's the economic repercussions of that are also hard to predict. But, you have economists already warning of this recession talk still. And, that reminds me, JD, we should talk about this. The CPI number this morning was one of the lowest it's been in years, if not the lowest. And already, the folks I spoke to this morning dismissing it entirely. And, March inflation, I think it was 2.4%. And that's below, I think it might have been 2.6 was the consensus expectation. And that's the first month over month decline since maybe start of the pandemic or something.
Yeah.
So you have people that are already calling for the Fed to cut rates, and they're in the minority right now because most people are saying the Fed should not be cutting as tariffs sort of roll out. That could be inflationary. But then, my sense is the people on the left will say, okay, we need to give Trump zero credit for any type of positive trends we see in the economic data. And those on the right will say, oh, cooling inflation, that is the art of the deal. And, I imagine it's somewhere in the middle. it's hard to say. We probably won't know for another 6 months, honestly, really what the inputs and outputs here are with inflation. But it's a lot to keep track of, and I'm doing my best here.
And you're doing a great job with it, my man. Absolutely, no doubt. Yeah, let's talk a little bit more about CPI because, of course, that we know for a data-dependent central bank, the way Jerome Powell and the Fed, as they say, hey, the ultimate goal are getting these very sticky, very stubborn top line or core inflation prints down closer to 2%. But on the other end of the coin, we can't forget there is a dual mandate for the Fed. And so we've heard a lot more from Jerome Powell the last 8 to 9 months, I would argue, saying, while inflation is one thing, we also need to watch about the labor market and make sure that we don't have a deterioration of conditions in the labor market, which could also, unfortunately, be something that forces the hand of the Fed to raise interest rates. Are you surprised that at least given this current environment, how into tariffs we are, how into market uncertainty we are, that something like CPI, which for the last couple of years has been one of the more important market catalysts that we have, today it's a little bit of a drop in the bucket, man. It's worth talking about, but it very easily gets missed amid all the other noise because there is a lot of noise right now, Phil.
So, I saw so many folks this morning almost surprised on Twitter that, oh my God, we had a CPI report this morning, and no one knew almost that it was coming because of all the tariff talk. So it gets buried in the news cycle, in the data cycle. And it was only a few days ago Jerome Powell came out. He had some public comments. He said we're effectively in wait and see mode for the Fed, and they weren't going to move quickly because they want to see how tariffs impact the economic data. And then suddenly, when you had all the craziness in the stock and bond market, you had pretty serious economists suddenly calling, okay, we might need a emergency Fed cut. So you have very mixed signaling from the policymakers, from big sort of trendsetters in the media and market commentators. So it's hard to say right now. And we also, I try to remind myself this all the time. We don't know what the final tariff rates will be at all. Like Trump could tweet in the next 5 minutes that he's either multiplying all of them by 100x or deleting everything. So we just don't know. And that's a huge input for the Fed. Fed is really, the Fed is uncertain as everyone else because they're waiting on Trump to make some sort of final decision on these tariffs. And a lot of this, of course, depends on China. It depends on these negotiations. We hear that they're happening, but we don't obviously know how those are going. We probably won't know for some time. So the Fed is in a tough position because, for one, they're a backwards looking institution. So they have no choice but to look backwards and look at the data. So they're almost necessarily late on their decisions. So it's a tough job. But then when you have all the forward looking uncertainty and then it makes all the backward looking data feel late and out of touch already, I certainly would not want Jerome Powell's job right now.
I always say, as the Fed moves forward, I mean, imagine trying to drive a car in one direction, but the only information you have is the little bit you can see in the rearview mirror behind you. You can't see the road ahead of you. That's basically what the Fed is trying to do, orchestrating a soft landing using, to your point, lagging indicator data to drive the economy forward. Let's wrap up with this because we're near the end of our time. We mentioned Jamie Dimon earlier. The recurring theme of our conversation is uncertainty for the road ahead. But Phil, this time tomorrow, we're going to have our first batch of earnings season. We know the big banks kick things off. We'll hear from JP Morgan. We'll hear from Morgan Stanley. We'll hear from Wells Fargo, BlackRock, a handful of others. What will you be looking for as we get into earnings season, either from those key financial names or, of course, as we roll on later into April and May, we're going to hear from a lot of the big tech companies. And I got to imagine we'll hear a lot of references to AI, as we always do, but I feel as if the magic word of this earnings season is going to be uncertainty. I'm sure someone's going to keep count of how many times we hear that word in earnings reports. What will you be following for earnings season?
The big thing really will be not the earnings results. So you can look at, earnings beats and misses and whether they met expectations, all this stuff. But in this specific context, none of that is that relevant because what you should be looking at, I think, is forward guidance. And the forward guidance is going to tell the whole story of tariffs through this the corporate lens. They might say, okay, we're expecting prices in some capacity or our margins to shrink due to tariffs, due to our supply chains, all this stuff. And I imagine every single sector will be revising their forward guidance in some capacity lower. But then if we learn in the next few weeks before the next quarter comes out, it's going to be radically different because I imagine there will be some folks that say on these earnings calls, okay, we're lowering by X% our guidance for the coming quarters, and then in a quarter, next quarter, if we find out that maybe tariffs are gone or not as intense as anyone anticipated, they're going to just hike back their forward guidance again, and so it'll be a lot of up and down, I think, and that corporate uncertainty with Trump, with tariffs, it makes it very difficult to run a business. And we're going to see that reflected, I think, in volatile stock prices, up and down forward guidance. We're probably going to get a bunch of analysts across the board giving non-consensus views on how they expect certain companies to perform on earnings and their stock prices. So I guess the summary of all this, it's a big mess, and I wouldn't take the earnings, as gospel in the coming weeks, because I am certain they will change dramatically quarter over quarter this year based on what the White House does.
Yeah, well, I'm sure at least the coffee shops down here in the financial district will do very well, at least for the days and weeks ahead, because people like you, people like I, we certainly need it, as much caffeine as we can to get through the next few weeks.